try to ask you a question. Have you ever been in a situation that the seller asking price this the same or higher than the sale revenue, and the reason she said because that's the price she bought it 15 years ago? Is it make sense? I look at the business reference and her industry, the water treatment system. She sell the water. She came to the restaurant, the grocery, the supermarket to install the water filter, and I cannot find it. So how do you think?
I mean,
Oh,
I have sold businesses before for more than the gross revenue, if
oh,
that
you
was
do?
your initial question. I
Oh,
have done that before, but I mean, it was based on the fact that they had really high profit margins. So, if their profit margin is 50, 60%, then, when you calculate out their SDE and all that, sometimes it makes sense. Sometimes, you apply a multiple to that SDE and you end up, or the EBITDA, and you do end up with a price point that's more than, the gross revenue. So
oh, so it's
it's not
normal.
necessarily an issue.
Uh,
It just depends on the EBITDA and the SDE in whether or not you can support it.
yeah.
And also the price, from a financing standpoint, can the cash flow or the SDE or EBITDA, is it sufficient to support the asking price?
I understand. Even though if they did not show the profit on the revenue on the income tax, but they do have the book to support, it's fine as well, right?
Well, if they didn't show the revenue on the tax
Yeah.
returns, then a buyer is going to have a very difficult time getting financing. So no, in that case, again, it goes back to if the cash flow of the business is sufficient from a lender standpoint, to cover the debt service associated with a loan. Now, if they're not declaring their income and their tax returns are showing a loss, then the lenders are not going to underwrite a loan because they can't. The tax returns don't show enough cash flow to, even with your add backs, because you can't add back money that has been skimmed.
Oh, oh,
So if they didn't declare their revenue, then it's like, well, too bad, you didn't declare it, you pocketed it. So that is one thing that you cannot do. Lenders are not going to accept that. There are two things the lenders look at, that they will not allow you to change. One is the gross revenue, and the other is your cost of goods. And so you can add back travel expense and auto expense and, some of the expenses that have been expensed out that show up on the tax return, but you can never add to the revenue. And and the lenders, at least all the ones I've worked with, have said they will not accept any adjustments to the cost of goods. So I had a situation one time where the business owner was, it was a manufacturing company, and they were running all their contractors' fees, construction fees, Home Depot, all those things. They were running that through cost of goods sold, and for their personal repairs to their personal home or to the beach house or to whatever it was. And then they wanted to try and add those back. The lender said no. We cannot make adjustments to cost of goods.
only when it's shown on the income tax we can add back, otherwise no.
Exactly. Yeah, if it shows up on the tax returns, that's what they would tie to. That's what they're going to tie back to. So let's say you have on your tax returns, let's say you have $1 million in gross revenue, and you have, 350,000 in cost of goods.
Yes.
And so that's what they're not going to let those two numbers change. The lender's not going to let those two numbers change. Now, if in your operating expenses or your other deductions you have, let's say you have $10,000 in auto expense, and the business really has no need, it doesn't have a delivery vehicle or anything else, and so that's really just a perk for the owner, then they'll, sometimes they'll allow you to add back that 10,000 and they'll accept it. Other times, if the deal's too tight, they're not going to look at anything, at any of the operating expenses added back. So yeah, so I mean, business owners, there are some business owners, they just haven't been educated and they're so focused on not paying any taxes that they really just don't realize that they're making their business basically unsaleable because nobody can get financing for it. And so they really need, even if it's only 1 year, they need 1 year of tax returns that show sufficient, that are relatively clean, or at least clean enough to show sufficient cash flow to cover debt service on whatever amount it is that they're looking for on their
Unless the buyer pay them cash, unless the buyer offer cash, in that case, they accept it.
Yeah, I mean, and there are a few buyers out there. I don't deal with those. I mean,
Oh,
so when I'm marketing a business, I'm not going to say, like, again, goes back to tax returns. If the tax returns say there's $1 million in revenue and the
yeah.
owner says, oh yeah, but I pocket an extra 30,000 a month,
Yes.
I don't care.
Oh,
What I'm going to advertise or market is $1 million in revenue because that's the only thing I can prove
oh, that's true.
based on the tax returns. And the last thing I want to do is go out and say, oh yeah, there's actually, even though the tax returns say 1 million, there's actually, 1.5 million or 2 million in revenue. If I'm advertising that way, that's really setting myself up for a lawsuit for misrepresentation because I
Oh,
have no reasonable belief that that's factual, no reasonable basis to believe that that's factual.
thank you. I understand. Thank you so much. Thank you.
Sure.
Yeah.